Okay, let's move to this week's upcoming events. It's a busy week. So today, Wednesday, when we're doing the show live, we have manufacturing PMI from the UK. It's a day of, in general, manufacturing PMIs. We had the official data for China, which came out as expected. Didn't move markets too much. The number from the UK could be interesting. See if the manufacturing sector benefits from a weaker pound or not. We have the first hint for the non-farm payrolls with the ADP non-farm payrolls. It's a private sector report. Last month it was a bit weak. Let's see if it bounces back. But job gains, private sector, public sector are relatively stable. The second hint for the non-farm payrolls also comes today. It's the ISM manufacturing PMI released at 3 GMT. Let's see if Trump's talk about reviving US manufacturing helps build optimism in the manufacturing sector. These also serve as hints for the non-farm payrolls, but also have a merit of their own. And the big event for today is the Fed decision at 7 GMT. Of course, you're invited to watch the live coverage by Valeria Bednarik and Mauricio Carrillo. The Federal Reserve meet for the first time in 2017. Last time on the Fed show, we had Janet Yellen and her colleagues raise rates. That was widely telegraphed, not a surprise. What was surprising last time was the hawkish hike. Okay, so the main thing is that they upgraded the number of projected rate hikes from 2 in 2017 to 3. Now, later on, we learned that this was probably based on some members. Some members believed what Trump said about fiscal stimulus, and they pushed their forecasts, nudged them a bit higher, and that changed the median from 2 to 3. So it was a bit more accidental, a bit more wishful thinking than a real intent. That's why at the beginning of January, when we had the minutes, we had the dollar slide a bit lower. But in any case, they're generally optimistic about the economy, see inflation as getting back toward the 2% target. They're happy with the employment. I mean, cautiously optimistic. And anyway, this time, we don't have a press conference by Yellen. We don't have new forecasts. And the Fed, even though they say every meeting is live, usually acts in one of the meetings when they do have these events. That means March, June, September, and December. Now we're in the middle. First decision for 2017. New president in town. That means wait and see mode. Okay. Anyway, markets expect them to raise rates only twice this year, and at least the first one, even if they raise rates 3 times, the first hike is only expected for June. That means after 6 months, and then maybe September and December, more likely only December, but who knows what will happen in the second half. So for today, no changes expected in interest rates. No dissents are expected. They will, of course, update their the words in the statement regarding the economy. We had jobs report, we had GDP, we had other stuff. Basically, nothing really material has changed, so I don't expect big changes. Now, I don't expect big changes in the statement. Doesn't mean that markets will not move because volatility is relatively high. So if markets see any kind of hawkish bias, the dollar could rise. If they see any bearish bias, the dollar will fall. But this will take time. It might not be seen in the immediate reaction. We have the first reaction the immediate reaction when the statement is released. Then we have some analyst comments, a second reaction. Then we have the Tokyo Open. And then the full verdict, in my opinion, is given in the European session. So we might not have an immediate shock tonight from the Fed decision, but it might come. We might have a bigger reaction in waves. In general, the Federal Reserve wants to stay out of the headlines until it knows what it really wants to do. So I don't expect, I expect them to try not to say anything really big. Okay, so that's the Fed preview for today. Not the most important decision, but still worth mentioning that it moves markets. Let's continue to tomorrow, Thursday. I'll be watching the Spanish unemployment change early in the morning. could have some influence on the euro. Construction PMI in the UK probably this time will not move markets too much, because tomorrow's big event is the Bank of England's rate decision. Again, I invite you to join live coverage. I'll be there as well with Valeria Bednarik and Mauricio Carrillo. The decision itself is at 12 GMT. Half an hour later, we have Mark Carney, the governor of the Bank of England, talking about the decision, explaining the report. It's dubbed Super Thursday because the Bank of England also publishes the quarterly inflation report, which is, well, quarterly. And of course, we have the meeting minutes, something they do now every time. So we'll have lots of information to digest. No big change is expected because they're still waiting for the impact of Brexit, still waiting for Trump. We'll talk about that a bit more in detail. No changes doesn't mean no volatility. I do not only hope, but I do forecast that we'll have some action. In between the decision and Carney's speech, we have a speech by ECB's Mario Draghi. Let's see if he comments, if he says anything regarding Trump advisors' comments about the weak euro or higher inflation or anything like that. Should be quite interesting as well. Will he steal the show from Carney? I don't think so, but it'll be quite an interesting time for the euro, the pound, and these currencies, of course, against the US dollar. So quite a bit of action tomorrow as well. Friday. Friday we have the more important release from China, the Caixin Manufacturing PMI. That's the independent measure of Chinese manufacturing. That's in the middle of the night, of course, the morning in China. And the most important PMI from the UK, the services PMI, that's the biggest sector. And of course, the non-farm payrolls in the United States. That's the main event, the first Friday of the month, as always. Should be lots of action. We'll have a special preview on that shortly. And this time we have the services sector measure, the non-manufacturing PMI at 3 GMT, together with factory orders. So quite a bit of action in the last, in the second half of this week. I think we had quite a bit of action so far with Donald downing the dollar, but more is due. So this is upcoming events for this week, the first 3 days of February.